Naresh, it's been consolidating after the break past 51.80. Do you think there's a lot of upside, or are we trading close to the higher end of the trading band now?
Then personally, I think in this quarter, you're not going to see the markets run away too much. I think we've discussed this. There's a lot of supply of paper which will be continuous in the markets over the next 2 to 3 months. Of course, Government of India is one big supplier, but you're also seeing a lot of private sector companies now coming and supplying paper. So my sense is you will see supply of paper at higher levels. Of course, there's a lot of liquidity available in the markets at the lower levels with the domestic insurance companies, FIIs, everybody having a lot of cash. So the markets are not going to go away. So therefore, you continue to remain in a trading zone. I think this is this quarter and maybe the next quarter is going to be very much a stock pickers market in terms of outperformance. So you'll typically keep on looking at companies where either they are outperforming the analyst expectations or numbers, therefore the stocks will do well, or stocks which are very undervalued, especially in the mid cap space or in the small cap space, that will show movements.
Naresh, morning. So is 5200 the top end of the trading zone or somewhere in the middle? In that, can we rally a bit more from here?
Mithali, I think 5300, maybe 5400, I don't know. I think another 4-5% markets may move. I think the burst of liquidity that keeps on coming, and we are seeing very strong liquidity at lower levels and in good stocks. So there is no shortage of liquidity. So that burst of liquidity can definitely give the markets a leg up. But my contention is that when there is so much supply of paper which is around the corner, it doesn't make sense to chase stocks and get the prices to move up and then you try and buy that, because I think we are at a level around 52 to 5400 where a lot of the clearing can easily happen. My sense is the first round of clearing will happen over here. A lot of paper will get absorbed, and after that only the market will start looking at moving to the next level. I don't think 10 billion or 15 billion is a large amount of money, even if that kind of supply of paper comes in this quarter. So eventually, of course, the markets can easily absorb this and move ahead. But for the next 1 month or 2 months, I would be slightly more cautious on the overall market movement.
The market actually dealt with a lot of paper supply through the second half of 2009, Naresh, and it still managed to move higher. Is it that's keeping it subdued right now, or is it just quiet ahead of an event like the budget, which may likely be a big one this time?
That too, but I think let's look at this. 2009, since you mentioned, I think from May onwards, one, of course, we came in on the back of a very strong and surprising victory for the government. So, the May jump of 20% was completely, not factored in by the market. After that, if you see, there was about $15 billion of flow which came in the primary side cumulatively across all products. And there was that kind of supply of paper. Our estimate is in this quarter, you might actually have $8 to $10 billion of supply of paper, maybe even more. So, you are looking at much more concentrated supply of paper continuously, being there. Markets can, like I say, I think the markets can potentially move, but my view is just pure liquidity versus, and of course valuations have now changed from where they were about 6 months back. So right now just pure liquidity driving the markets up another 4-5%, maybe there's space over there. I also agree with what you're saying in terms of, markets concerns around whether there will be tightening of interest rates going forward, whether, the budget will also have some kind of stimulus withdrawal measures, or pre-budget there might be stimulus measures withdrawal kind of a situation. So fundamentally, there might be some amount of tightening. But our house view on that is slightly different. Our view is it's actually going to be an indication of the fact that the economy is doing very well when you see these kind of measures, getting withdrawn. So we are not really very worried if, small changes happen on the withdrawal side, or small changes happen in terms of excise increase and stuff like that, because fiscal deficit is a worry. And if the government works towards reducing it, I don't think the markets are going to be necessarily very, bearish about that.
So what are you telling your clients now, Naresh? To not be terribly overweight tactically on the large cap space and just focus on a few individual stories in mid caps and ride out the next quarter or so?
Yeah, I think Udayan, our constant listening to investors is this is a very good time to actually try and get the get your stock picking right. I think this quarter, next quarter, keep on looking out for ideas. So therefore, there's a lot more intensive work in terms of meeting with companies, meeting with managements, understanding stories a lot more, trying to find the edge in this market. You're not going to have a straight, simple run through in the market. So you have to work towards finding the edge. The edge can come in, of course, stocks like I mentioned. The edge can come in sectors which are not in favor. So you try and pick up some things which are not in favor and hope, if that ground level things are changing, then try and do that. So stuff like what we did some days back in terms of Edelweiss, going and meeting dealers and other people to figure out, what's really happening at the ground level. I think that really is working very well, giving us a lot of early indicators. So you have to do a little bit of extra work, I think, in this quarter. But my view is there is a lot of alpha available in the market from the stock picking side, because the number of stocks and sectors are still reasonably undervalued compared to the growth uptick that is possible in them.
What about earnings season? The first numbers from the technology companies have been good. Do you think the market has priced in all the good news, or are you still upping your price targets on frontline or the heavyweight technology space?
I think overall we are looking at about 17 or 18% increase in earnings YOY for the Sensex stocks. I think technology also, of course, Infosys is a surprise on the positive big time to everyone. We have been reasonably bullish on Wipro and TCS any which way. I don't think we are currently upping our estimates in a hurry, but technology, of course, continues to look good. I think the large cap technology sector, the only worry being rupee appreciation, but our view is that sort of got factored out over the next 12 months. So that sector we are pretty comfortable. But overall also, I think earnings wise we are pretty comfortable, except I think a couple of sectors where we think this particular, especially oil and gas and maybe parts of banking and financial services, where this quarter will not be very good. Vis-a-vis that, I think other than these two sectors, quite a few of the other sectors which are primarily consumption driven will have reasonably good numbers. So I think the interesting thing is, FY11 estimates. I'm sure you have that. Our current Sensex estimate for FY11 is about 1054, 1055. Now, this is already 10% higher than what it was about 6 months back. So you are looking at, most of the analysts have upped their numbers for the next year. And I think part of that will also start, playing into the market as we go through the quarter and probably go towards the next quarter. I think that's why my view is this quarter overall at the index level might be sideways, but stock picking will keep on happening, sector picking will keep on happening. The interest in the market will be very high. The other factor is, I think the retail will also start wanting to make a comeback in the market. We'll also see a lot of IPOs happening, and if IPOs happen at right valuations, retail typically comes back into the market through IPOs. So you will see a lot of activity from the retail and HNI side in the market through IPOs. It's normally a much more convenient way of entering the markets. So all that action will be very high. I think the market will be very vibrant, but the Sensex might not be running like it was.